Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rupas Kamau, Market Analyst at FX Pesa. So today we'll be talking about the top news that are currently moving the markets. And once we cover that, we will go through the economic calendar. We'll be looking at the expected earnings towards the end of the week. And on top of that, we'll do some technical analysis, try to understand the major patterns emerging in major currency pairs, patterns emerging in stock market indices, as well as commodities such as gold and oil. So once you join in, can you just say hi on the live comment section, and these will confirm that everything is working just fine. So as usual, I will begin with a disclaimer that this particular session is not investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So as the title suggests, all eyes are on US CPI inflation at 3:30 p.m. later today. And that's where we expect to have the biggest report of the day, which has the potential to cause the biggest movements in the markets. So as part of this session, we'll be looking to prepare for that so that everyone can trade from an informed perspective. So I can see Kamo Jr. is already in the house. What's your view on it? We'll be selling gold. We'll cover that too. Hello, Sam. Hello, Richie, Josiah, Zephania, Faith, and Wangari. Thank you for joining, guys. I really appreciate you. So let's get things started. So we'll be starting with the economic calendar. So from this economic calendar on FX Factory, that is for the 7th of July, on Thursday, we already have data that already came up in the morning. We had a surprise uptick in UK GDP. So we saw GDP rising from 0% in the previous month up to 0.4%, which was higher than the expected 0.2%, indicating that the UK economy is picking up strongly, especially now considering that they have a new administration. We should be looking forward to more economic policies that could materially change how the economy works. So construction output was up 1.9%, which was higher than the previous reading of negative 1.1%, and better than the expected 0.5%. So also a very good key indicator for the UK economy. Then the goods trade balance went to negative 17.9 billion, which was a bit of an improvement from the previous reading of negative 19.4 billion. And these missed expectations. We expected a much bigger improvement in the goods trade balance. So for the index of services quarter over quarter, there was a slight improvement to 1.1%, while industrial production improved to 0.2%, up from a drop of negative 0.9%, but slightly missed the expectation of 0.3%. So manufacturing production month over month was up 0.4% as expected, which was a big jump from the previous reading of negative 1.6%. So the key data point among all the released data points in the UK was the GDP data. And as you can see from a record of previous data points, then you'd notice that we've had several months where the GDP was very close to zero, and in some cases a drop below zero. But then here we are seeing the same energy that we saw in May, around 0.4%. And now it's a good indication that the UK economy is now headed in the right direction. So we'll be looking at how the markets reacted to that information. Then now we focus on the key event of the day, which is the CPI inflation for the US. So for those who are new, CPI is short for Consumer Price Index. It's a measure of a basket of commodities that are consumed by the average households in the US, which basically includes items such as the cost of housing, the cost of healthcare, cost of education, cost of food, beverages, clothing, transport, energy, and so on. So when you estimate the price of those items month over month, you're able to compare whether these items are becoming pricier or cheaper over time. And if the price is increasing, it means that you're spending more money to buy the same products, which it basically gives you a measure of inflation. So as per the last data point in the last 1 month, we saw US inflation dropping from 3.4% down to 3.3%. So this is the data point we had. I will remove the forecast here. So we had a slight drop from 3.4 to 3.3%. And now the data we're expecting today is expected to drop to 3.1%. So I want you to pay attention to a key data point here. And this is the trend we have seen in US inflation. So moving all the way back to 2020, around March, we saw the US go into a lockdown as a result of the COVID-19 pandemic. And then the US lowered interest rates, printed a lot of money, leading to an increase in inflation from a low of about 0.2% all the way up to around 9.1% in July 2022. So upon seeing inflation being this strong, the Federal Reserve Bank of the US cut the quantitative easing programs, and after it cut the money printing, it started hiking interest rates, literally moving interest rates from 0.1% all the way up to an upper limit of 5.5%. So since around March 2022, when the US started hiking interest rates, we saw inflation peaking at 9.1% and then dropping all the way down to 3.0%. And this was as of July 2023 or last year, same time. So for a whole year, we have seen US inflation remain around 3%. And this doesn't seem to be moving below 3%. And the Federal Reserve Bank of the US target is 2.0%. So inflation has been playing around here, moving to a high of 3.7%, then dropping again to a low of 3.1%, then rising again, getting to a high of 3.5%, then dropping to 3.3%. And this is now smelling like stagflation, where an economy is stuck in a high inflation environment. So as for the last two meetings that the Federal Reserve Chair, Jerome Powell, has had, the first one, which was on Tuesday, presenting to the Senate Banking Committee, Fed Chair Jerome Powell maintained the same policy stance that he has had all year, that whatever happens to the US court will guide the decisions of the Federal Reserve, which basically means a data-dependent approach. So what Jerome Powell is saying, that despite the pressure to cut interest rates in the US, the Fed hasn't yet achieved its mandate of having full employment in the US economy and at the same time having stable prices with an inflation rate around 2%. So inflation rate is still 3.3% as per the previous reading, but the job market is worsening. So we saw unemployment last week on Friday jumping to 4.1%. So now he mentioned that the Fed is facing two major problems. One, unemployment is increasing, and two, inflation hasn't yet subsided towards the 2% target. So that all gathers or works to make today's announcement very important for the Fed, and that is why it's very important for us as forex traders. So why is it? The main reason is that the Fed policy is being dependent on data, and if inflation happens to drop, let's say below 3.1%, then there will be increased confidence that this inflation is headed towards 2%, and that might lead to the Fed considering an early rate cut, and that is as high as September this year. So in this case, there's an overall expectation we could be seeing a lot of things changing as a result of the Fed. And if they happen to do change, then that would mean the dollar weakening. So the dollar has been pretty strong as a result of the rate hikes and the Fed deciding to hold rates higher for longer. And now we are looking at a potential where the Fed might consider holding rates on its next meeting, which is set for the 31st of July this year. So there is already a 95.3% chance that the Fed will hold rates at the current level, which is between 5.25% and 5.50%. But then if you jump to the next meeting, which will be in September, then you notice that the potential for a rate cut is so high that the market is having a 68.1% probability that the Fed will cut interest rates. So what usually happens is that if there is increased confidence that the Fed will cut rates in September, the participants in the markets will not be waiting until the 18th of September so that they can go and short the dollar. So in that case, you'll realize that they will start shorting the dollar early in a bid or in a way trying to front run the Fed. So that's why it's very important to understand the importance and capacity of today's data point in policy making by the Fed and how the markets might react to the information. So going back to the economic calendar, in this case, I'm looking at the trading economics calendar. So the annual inflation rate in the US is expected to fall for that straight month to 3.1% in June 2024. This will be the lowest data since January compared to 3.3% in May. So the decrease would indicate the disinflation process is underway. Following a brief uptick in the first quarter, compared to the previous month, the CPI is projected to increase by 0.1%, meaning that that basket of goods and services that is used to estimate CPI may have become pricier by 0.1% in the last 1 month after a flat reading in May. So in the May, we didn't have a change in the price of that basket, but we could be seeing this basket increasing by 0.1% in June. So gasoline and used car prices likely fell and shelter costs moderated while food prices probably ticked up. So we are yet to see the data, so the true measure will be released at 3:30 p.m. And that's why it's very important for you as a trader to follow the data, and once it's out, understand what it means for you before you execute your trade. So the monthly core inflation rate is anticipated to stay at 0.2%. So that being said, I think now it's time we jump into your favorite part, where we do some technical analysis and try to understand where the prices might be headed next, especially after the report comes out at 3:30 p.m. So this is the MetaTrader 5 trading platform. It's the platform that we use for trading as well as for analysis. So we also have other applications available for use in trading as well as analysis, including mobile app devices. So if you're just new to trading, you should know that FXpressor has a smartphone application called Equity application. Equity with an I at the end. So when I say equity, it's not Equity Bank, it's Equity with a TI at the end. So if you look for the Equity app on your app store, then you should have the app where you are able to trade from your device. So looking at the charts, beginning with the dollar index, we saw some good signs on Monday and Tuesday, where the dollar index was indicating some form of recovery. So this happened between Monday's opening price to Tuesday's closing price. Then on Wednesday, we saw the dollar index now starting to lose some ground. And today being Thursday, we are seeing the dollar index take some step backwards. So overall, this seems like a market where the dollar index seems to be taking some form of sideways momentum. So if you look at the highest prices this week and then compare them with the lowest prices, then it might be safe to assume that this market is just trading sideways. So compared to last week, we can see that the overall price action last week was majorly following a path this way. But then this week, we might even say that the market is just moving sideways. If we remove these arrows, then it becomes clearer to everyone. So the dollar index has traded sideways for the last 4 days. And now we could be having a major direction identified by the time the day ends. So will the dollar index continue strengthening or weakening? So it depends on two things. So one, if inflation comes at 3.1% or below, then in that case, we should be expecting to see the dollar index being pretty weak and continuing the bearish momentum. So on the other hand, if we happen to see US inflation come at 3.3% and above, then in that case, we should be expecting a very strong dollar because the Fed cannot cut interest rates into inflation. So with that in mind, then we know how to interpret the rest of the market. So if it's Euro USD and inflation happens to be weaker and the dollar weakens, then the euro dollar continues with a bullish momentum. And in this case, after having tested this resistance earlier in the week, pulled back and then with a recovery, then the next available target remains on this resistance here at 1.08933. So we could be seeing the Euro USD making a rally to that price action level. And that depends on whether inflation drops to 3.1% and below. So on the other hand, we could also be seeing the Euro taking a step backwards if the dollar happens to strengthen as a result of higher than expected inflation. So it's the same case across board. So all you have to identify is the most recent support resistance areas, then use them as your targets. For instance, last week's high in USD Swiss franc seems like a major resistance. So we could be seeing the market headed here. And of course, if that doesn't play out, then we could be seeing the market going for a 2-3 week bottom or beginning a journey to continue the bearish momentum towards 0.88263, and that would be based on dollar weakness. So we go to pound USD after having the GDP data, which strengthened the pound. Then the pound becomes a pretty good candidate in case inflation in the US comes lower than expected, which basically weakens the dollar. So in this case, if you look at the daily chart, the pound USD is on a key defining price action level, which if broken would imply that the market is headed higher. With no much resistance, we could be seeing the pound making a good rally to 1.31369. So that is all dependent on what happens at 3:30 p.m. today. So for now, we could be seeing the pound extend the bullish momentum to 1.28923 as a result of the GDP data released earlier this morning, which was surprisingly positive. And by being positive, strengthened the pound. And now we are seeing the market going for this resistance area. Then for USD CAD, it's the same thing, same expected outcome. So in this case, we are seeing the dollar bouncing from a key level support, and this could mean that the market makes a big swing momentum. So for swing traders in the house, you understand what happens when the market is bouncing from a major support area. So a good way to trade this one would be if the dollar strengthens, you go for a bullish position and look at the most recent swing that had a reasonable move. It's already around this area here. So the potential for the market bouncing a second time from this support and making a rally to 1.3724 remains high if we happen to see a strong inflation number. So if the dollar strengthens, USD CAD might be a nice target to buy. And if the dollar weakens, then pound USD might be a really nice candidate to buy. So Asian pairs seem to have taken a bounce all the way up to this area here. And now we have some clear predefined targets where the market could play out. So let's remove all this noise. So we are already seeing that the beginning of the week was the highest price, and last week's low is also a target. So it really depends on the outcome of the news later today. So from the 1 hour chart, this is how it looks like with the potential of the New Zealand dollar gaining against the US dollar all the way up to 0.61526. And of course, the lowest price that we saw last week is also a nice target if the dollar happens to strengthen against the New Zealand dollar. So it's the same thing across board. You go to Audi USD, which we identified a breakout here. The market headed to our target, which was the previous high, and now the market is holding there, awaiting the CPI report. And of course, the breakout point was this area here. And as we always mention, sometimes the market may go back to the breakout point, and this would be in case the dollar strengthens against the Australian dollar. So from the daily chart, this is how it looks like. So we still have some nice targets on the upper side, and this really depends on the outcome of the CPI data today. So nothing much to analyze today because everything might be dependent on the outcome of that report. So remember, CPI is the new NFP. So even for USD JPY, we saw the market forming a head and shoulder pattern, drop all the way to this area, further downwards, and then make a recovery. And now we are almost hitting the previous high. So if the market breaks this previous high, then the next other candlesticks on the left will be from the 1990. So there's no telling as to how much the yen can weaken against the dollar. But then if we happen to see the opposite and the dollar starts losing to the yen, then the target will be all the way down to the low that we saw last week. So in this case, I'm talking about the market getting back to this area right from this top. And this is based on a case where the dollar weakens against the yen. So silver is currently consolidating. So we will be anticipating a nice breakout later today. So let's remove all the previous analysis and just focus on this area here. So I want you to focus on this form of consolidation that we have seen in silver prices. So I know it's somewhere around here. So there are literally just two trend lines connecting the highs and the lows here, forming this particular triangle on the 1 hour chart. And we are bound to have a breakout later in the day. So it's an easy technical trade where if the market convincingly breaks to the upper side, you go for buy positions. If it convincingly breaks to the upper side, you go for short selling positions. So whenever you see such a formation, then you know the breakout is about to be very defining and can be sometimes very rewarding. So as for gold, let's remove everything that could be termed as noise. So what we have seen for gold over the last couple of days is a market that is forming highs along this line. And if you observe the lows from this low to this low, and then this, and then this, then a line of best fit would be somewhere along these areas. So we expect that potentially gold could break the trend lines and make a major move. The major move could be either on the upper side or the lower side. So we should be very patient and wait for the market to break one of these, and that could give us a key level direction for trading. So also notice that this is a major resistance area. So when broken, it would imply that the market is headed higher. But then if you look at the recent lows, for instance, last week's low is always all the way down around here at 23.18, and the previous week's low was all the way down at 22.92. So we could be seeing a big move in gold. Of course, we know that the market could accelerate even higher and perhaps even hit a previous high around 24.40. And that's purely dependent on the outcome of the CPI inflation data. And if that doesn't play out, then a drop all the way down to 23.18 might even play out today. So expect extreme volatility at 3:30 p.m. And if volatility is not something you're comfortable with, maybe sit this one out. So the SP 500 basically formed a pattern here. That was on Tuesday. And then on Wednesday, that is yesterday, eventually made a break towards the upper side, retested and continued moving higher, forming a new all-time high. So as previously discussed, whenever you're expecting any major news, in most cases, you'll find that these indices will stagnate and start trading sideways, similar to the last 2 days. So whenever this pattern plays out, then all you have to do is to be patient, wait for the market to settle, and then go in the direction of the break. So it has happened here, it has happened here, and now it's happening again. In this case, I don't think it would be a miss for you. Just wait for the market to show you a clear direction and then take that direction. So you just monitor this area and watch the direction of the break. Same case for the NASDAQ. So we are already seeing this kind of momentum playing out. So it's not something new. So it happening here. The direction was down, market went down. Here the direction was up, market retested and then continued in the same direction. So it's just about monitoring these breakouts, and now we have a new consolidation with us. Apologies for a moment. So the Dow was trading sideways for a while. We were monitoring this area. There was a clean break. The market rallied higher. And now we have a market that is very close to forming a new all-time high. So the Dow could potentially rally to the previous high. And now, as we wait for the CPI inflation data, we monitor this area to see the direction of the break. So Brent oil happened to be pretty bullish for some good number of weeks. So this was 5 straight weeks with a bullish momentum before pulling back downwards. And then after hitting this support area, notice the strong bullish momentum we experienced yesterday. And today it seems to be pulling back downwards. So what does this imply? We had 5 weeks of bullish momentum, 1 week of bearish momentum. It's within limits, it's expected. We know that one of the key things that was driving the bullish momentum was fears that an escalation between Russia and Ukraine would impact oil production in Russia and disrupt supply, leading to higher prices. That situation was calmed down last week. So this week we have seen oil taking some steps backwards. But then yesterday, some very strong recovery. And if you look at the 4 candlesticks here, you'd notice the strong momentum yesterday. So now that we are seeing some form of pullback, it implies that we are seeing some technical patterns coming in. And in this case, we could be seeing that the market might be headed for some support level and then continue with the bullish momentum. So judging from yesterday's open, low, high, and close, open, high, and now we are going for a low, it makes more sense to be looking for a bullish position. So we could be seeing some bullish position coming up once the market finds some nice support. So we continue monitoring oil prices for the day to see evidence of buyers entering again following yesterday's strong bullish momentum. So now that we are seeing some form of pullback, perhaps it's time we start looking at various levels. For instance, the lowest price that we saw on Tuesday could be a nice buying point based on the evidence that we get. So the idea I have on my mind is that the market continues with a drop and eventually finds buyers coming in and driving prices higher. So we will be observing that to see how it plays out. And one of the key ideas is to monitor this particular trend line, which was serving as the resistance in the last 3 days before it was broken and retested. So market breaks out, retests, and continues. and now it's pulling back downwards, and we could be seeing the market getting around this area before bouncing higher. So as for Bitcoin, I think the nature of our triangle is changing here. So rather than a perfect symmetrical triangle, now it's turning to more of a rising wedge. And if you adjust to this high and then compare with this other high, then it seems like the market is taking this direction. And then for the lows, they are taking some direction around this route. So I'll try to draw using trend lines. So this is what we are seeing here. So the highs are now getting higher. And if you try to find a line of best fit between these lows, then this is what we have, with an overall direction indicating that Bitcoin prices are now following this trend line compared to our previous trend line here. So this is the trajectory in Bitcoin, and we are seeing some good recovery. So having bounced from this bottom here, then it implies that we are currently on an upswing and that the market could be headed towards the upper trend line here, around $60,000 per Bitcoin. So that's it for the day. I don't think I missed anything. European equity indices have been currently very strong, having bounced from major support areas. So we might expect to see some further bullish momentum, but also some very strong correlation between US and European equity indices. So if the major movements will be happening in US equity indices, then we could be seeing some contagion effect happening with European equity indices. So far, we are seeing a very strong bounce and rally. So for instance, the Euro 50 is expected to at least retest the previous highs around 5,028. So the UK 100 is already pushing towards the upper trend line, and the German DAX is also looking to retest the previous high here. So that's it for the day. And remember, we have a completely new episode of the Bullish Banter podcast available. So make sure to check out after this session. We also have a new episode in our Financially Incorrect podcast. Make sure to check that. I'm checking the comment section to see if there's any questions before we approach the end. What are your expectations on CPI? CPI, honestly, it seems a little bit tricky. So I'm expecting CPI to be somewhere in between 3.3 and 3.1, which is 3.2%. But I could be wrong, and we could be seeing a big shift. A good comment from Roy, nimepause Bullish Banter nikuje huku live. So we have a new episode of Bullish Banter, and it has some good information for you guys. It's available on every podcast platform, and you can also check it out on FX Pesa YouTube channel. Bullish on Bitcoin, yes, I'm very bullish, more bullish than ever. How might the market react should CPI data and unemployment claims come completely mixed? Right now, I don't think anyone cares about weekly unemployment claims. Everyone is focused on CPI inflation data, which, as Jerome Powell mentioned, is a key indicator in determining Fed's monetary policy. So I think everyone will be focused on the CPI, which has become the new NFP as a major mover of US dollar pairs. So there's a question on CAD CHF. I don't know why you're trading these crosses, but I'll check. So it's not something I've studied before today. So this is what we are having. It seems like a market that faced the wall. Think about it this way. This was a market that was considerably moving higher and higher and higher. Was moving along this trend line. But at one point got to this resistance, retested the resistance twice, failed to break, and then moved all the way downwards. So after getting to this support area, then it started moving higher. And now you're wondering from equal highs to now a new low and then moving up and forming another high, could we be getting a new high that is significantly lower than the previous high? So the previous high was here, and now we are seeing another high here. Could we be getting a new trend line indicating some bearish momentum? So for me, that would be a question that I take seriously between this recent high and this high. And now we are seeing the market potentially finding resistance along that area and perhaps moving further downwards. So I'll be estimating along those lines and judging by the price action for the better part of the week. It seems like the Canadian dollar has been pretty strong against the Swiss franc. Sorry, weekly. This is a weekly chart. So it's a 4-hour chart. So the last 3 weeks have been pretty bullish. The market weekend towards the end of last week. This week has been pretty bullish, but now we are seeing the market testing a major resistance area. So I'll be very interested in what happens next with the potential for the market going for the weekly low after bouncing from this resistance area. So it's likely that the market could be pushing further downwards. And from a 15 minutes perspective, you can see that you had a flag here. This seems like a flag to me. So a market that was playing along this area and for a very short period has formed a breakout. So if this was your flagpole and this is your flag, then the breakout is already on the lower side. I don't know who is willing to contribute here. Roy is saying Murichandishie, just put in my account. Apologies, Roy. I know it can be quite one thing. So on Euro versus USD, we have already covered that. So of the 3 CPI data to be released later on, which one has the biggest potential to move the market? And suppose we get a positive CPI data, but unemployment remains high, how would this play out? So as I mentioned, all eyes are on the CPI inflation data. So suppose we get a positive CPI data, but unemployment remains high. Forget the unemployment. Look at the CPI data. If it's positive, higher than expected, then the dollar is definitely going to strengthen. What is arbitrage trading? Arbitrage trading is basically a practice where you take advantage of price discrepancies across different markets. So in previous trading or traditional trading, where you could access different markets that were not harmonized, you'd be able to buy a product from one market and sell it to the other market instantly and make an instant gain because there was discrepancies in pricing. So think about it this way. If let's say gold is being traded at a premium of let's say $10 in China, then you can take contracts from the West, let's say buy gold from the West and then sell it in China and make the difference. So it's basically taking advantage of price inefficiencies in a market or across different markets. So what timeline is that? I'm sorry you didn't specify. I'm assuming you are talking about silver from seeing silver bullet there. So just checking. If you're talking about silver, it's on the 1 hour chart. My analysis is on the 1 hour chart. What is the movement generated in indices like NASDAQ? Strong weak dollar. So in this case, I wouldn't think a strong weak dollar, having seen that the NASDAQ and the S&P 500 have not been responding very well to changes in monetary policy. All they have been doing is going up. So if you've studied the SP 500 and the NASDAQ, the overall earnings for US top companies have only been going up. So with earnings just moving high and high, so even if the macroeconomic data points lead to a drop in the Nasdaq and SP 500. All we have experienced is the market making an immediate recovery. So in this case, even if we see a drop in SP 500 and the Nasdaq, it makes more sense to buy again because the earnings are only increasing and we could be seeing the market recovering much quicker. So that's a key consideration to make today. So a good question, does CPI affect the market the same way NFP joined you a bit late? So from my experience this year and last year, CPI inflation data has had a much bigger impact in the markets compared to the non-farm payrolls data. So we expect more volatility from a CPI announcement compared to the non-farm payrolls. So silver going well. I doubt that. From the chart we are seeing here, it's still within a consolidation zone. So it's still simply just moving sideways, awaiting this afternoon's data. Always here every news day, saved several accounts, big up. Thank you, Jimmy. So whoever is asking whether to go long or short today, as we have already mentioned, don't focus on going long or short until you understand the data, what it means, and how it drives the markets. So we don't know yet whether the pound USD will go up or down because we don't have the data yet, and the big surprise will be coming up at 3:30 p.m. and that's East African time. So make sure that you are ready at exactly 3:30 p.m. You check out the outcome of the data before going for that particular trade. So is there any correlation on gold versus USD currently? Yes, of course, the gold is being traded in dollars. So every unit of gold is being estimated in dollars. So if the dollar strengthens, then it will strengthen against gold too. If the dollar weakens against gold, then we will see a bullish momentum. So a good question, what do you need to see to enter and on what time frame? So as I mentioned, if inflation comes at 3.1% or below, then that should be weakening the dollar. And as I mentioned, if it's weakening the dollar, then you trade that against a strong currency. And in that case, we have identified the pound USD as a possible target. So the pound seems to be pretty strong today after the GDP. So from the forward chart, you can already see, from the daily chart, you can already see, and we could be seeing a long-term trend moving to 1.31369. So for the short run, we have an immediate target just around 1.28923, of which I don't know whether the market will be already here by the time you get to 3:30. And then for the other case, if inflation comes at 3.3% or higher, then a nice target could be on USD CAD, which just bounced from a major support area and could rally all the way up to 1.37240. So those two remain good targets. Whereas for gold, we could be seeing an acceleration all the way up to 2440 or a drop to 2318, depending on whether the dollar strengthens or weakens from the CPI report, which is something we have extensively explained during the time of this session. So thank you very much, guys. Thank you for your time. Make sure to check out the FX Pesa YouTube channel for new videos coming up. Register for a trading account using the links in the description below on YouTube. If you're on Twitter, check out the FX Pesa handle. This is where you get links and updates about FX Pesa products, as well as events. And of course, I appreciate everyone who joined this session. Thank you for your time. I hope to see you on the next one. So remember to like, share, and subscribe. So if you're on X, a retweet of this particular session will be an honor. I'll be very honored by you guys, and I hope to see you on the next one.